One of the common challenges as a new investor is to find stocks to invest in. How do you do your research? How do you find out what exactly you want to invest in and how much you should invest into that company? Today, that is what's on the agenda. Let's roll the intro and let's get back to the video. When it comes to investing, what I did is I broke things down to three big sections. The first section is considering your goals. The second section is the analyzation. And then the third sector is the actual investing and how much you will put into that investment. Let's go ahead and start with the first section. All right, let's consider those goals. This is money that you won't see until a medium to long or extra long period of time, depending on how long you want to hold. So that's something that you will want to write down. Is this an investment that you are looking to do, 5 to 10 years? 10 to 20? Is this a hand-me-down to my kids, or is this something that I'm going to go and grab profits from once I'm ready to retire? The next thing that we need to set goals for is, are we looking for high risk, high reward, or are we looking for low risk, high reward? I would assume that if you are an investor, you are looking for something that is low risk, high reward. So are you looking to find, just Apple, just Tesla? Are we looking at ETFs or index funds, bonds? What exactly are we looking for? That's just something that we can game plan on. The final thing when it comes to considering your goals is, are we looking for growth stocks or dividend stocks? The difference here is that with growth, you are looking to get it at a lower price and sell it when it's high. So that is the growth aspect. If you believe in a stock or believe in the company and you think to yourself, like, what, this is underpriced, this is a great buying area, I'm going to get it now, hold it for 10 years, and then sell it when it's higher. That is looking for growth stocks. Then there's dividend stocks. Dividend stocks are usually more safe. They don't move up and down. They're not as volatile as growth stocks, of course. But the good thing about dividend stocks is that those companies that pay you dividends pay you a monthly or bi-monthly or quarterly, whatever that their standard is, but they pay you money for owning those shares. So that is where it takes money to make money. Maybe you buy 500 shares of a company, 400, maybe less, 50 shares of a company. But in return, they pay you out monthly, and now you have another source of income. This is great when you can buy a great amount of shares all at once, because if they're only giving you, 90 cents or 70 cents per share, which is a lot because some companies only give you like 10 cents a share. But if you have 1,000 shares and you get 90 cents per share, that's a good profit each month. So in a section 2, moving on, we have the analyzing. While you're searching for stocks, the first thing I tell people is to find a company in a specific field that you like or that you enjoy. If it's a hobby, or if you like pets, or if you like tech, whatever that it is. For example, my wife loves cruises, so she did her research on Royal Caribbean. I love tech, so I did mine on a lot of computer chip agencies and tech companies. So after you've done that, now you want to build your watch list. You can write it on a piece of paper, but I'm going to show you how to do it on your actual trading app. Now, when it comes to building a watch list, I have a watch list, as you see at the top, called Day Trades. If you go here, you can go to just my dividend stocks. But if you want to make a watch list, this is important because this is where you put all of the stocks that you are interested in. So let's name this long term. Oh, I already have an account called long term. So let's just do long terms. Now, the stocks that you were looking at were eBay, FedEx, and just to do another random one, let's do a tech stock. Let's just do Microsoft. If you come across something that you didn't like and you say, you know what, FedEx isn't going to be on my list anymore, all you do is click, delete, and back, and it's gone. Now you're only focused on these two. You don't have to worry about writing it down somewhere or forgetting where you put in your notes. Just log on to your brokerage app. You can do the same thing on Webull or Robinhood or whatever that it is. Just log on, delete it, and say, all right, now these are the two I'm focused on. And once you made that purchase of the stock that you want, just know you can still continue to build the watch list, because you never know, you might come across it one day and and something catches your eye, and now you're like, wait a minute, I forgot about this company. Let me go ahead and buy in now. After you create that watch list, now it's time for the eyeball test. With the eyeball test, this is the scanners that you can use, and I'll also show that. I'll show that off of Webull. All right, so screening and looking for stocks on Webull. If you open up the app and you go to markets down in this area on the bottom left, and at the top, you're able to hit explore. What you can do is go here and do create new screener. Let's use sector so we can be able to go through on our own and pick out what we want to look for. Let's just do telecommunication services. This is just an example. Now, with these indicators, when it comes to market cap, percent change, turnover rate, return on equity, and dividend yields and net margins, just all these different terms. This is something that I would definitely recommend to Google, read about, find some articles. It's a lot of information to go through in terms of vocabulary in such a short video. For this video, I'm going to keep it simple. Market cap, it can be a large cap or a small cap. And let's just see what we have with a large cap company within these sectors that we chose. So we do view results. I see Fitbit. I see GoPro. So from this point, this is when you would click on the stock. I've never heard of Roger, but this is when you would click on the stock and actually go to the yearly chart just to see the progression, possibly go to the quarter. You can always look at the monthly and just kind of get an overall idea of where the stock is tending to move. So this is just, overall information. This is you taking your notes. This is the eyeball test. Remember that, the eyeball test. You're just kind of searching and browsing, taking notes, and then eliminating any companies that have red flags. Now, after you've done that, what I advise people to do is to go into finding their balance sheets, earnings, guidance. This is how much money that the company is making, what are their future goals, and if you are planning to invest in them 5 or 10 years from now, you just want to make sure you understand what that company should look like 5 to 10 years from now as well. When it comes to researching and finding more information about the company, the one thing that I would recommend is that you go to the company's investors page. Usually if you type in that company and investors website, it will pop up. Outside of the investors page, you can look at websites like Bloomberg, Yahoo Finance, Google Finance, XC Foreign Exchange. When you are a new investor, just remember to take your time. A lot of people get FOMO, which is fear of missing out. Just be patient. It's okay if it takes you 1 week or 2 weeks or 3 weeks or even longer than that. It's okay. At the end of the day, you are an investor, so you want to take your time. If you miss a stock that went up 15, 20%, even if it's 30%, it really doesn't matter because you're investing in that stock for the long term. So whether you waited for it to come back down and then purchased it, or whether you bought it at the top, regardless, you're looking for the profit and the gains that comes 5 to 10 years from now or 10 to 20 years. The last part, section 3, we have diversification when it comes to investing. Let's first talk about the budget before we talk about diversification. If you only have $5,000 to your name or in your savings account, don't go put all $5,000 in the investing account. We want to stick between 15% to 20% of our full assets. So if we have 5,000, maybe we only need to do 1,500. That way, you always have more room to invest later. You don't want to use all of your capital, but you start small and then you invest, and then maybe months out, you invest a little bit more. The importance of investing is that you have cash flow coming in. The more cash flow, the easier it is to invest, because when you are investing, you aren't trading. So you're not looking to get profit right away. You might see that you're up, $1,000 after a year, but that doesn't mean that it's time to take that money. Moving on to diversification, it's fairly simple. You just don't want to put all of your eggs in one basket. If you only have that 15% that you're going to use, maybe instead of buying just one company, maybe you buy 2 companies. I'm not saying that you have to have 10, 15, or 20 different companies that you're investing in with your long-term portfolio. A lot of people do have that many. When I'm investing, my goal isn't just to have 10 shares of that particular company. My goal is to have as many as I can without breaking my own bank. To wrap things up, I will say invest smart and be patient. In terms of investment platforms, definitely check out Thinkorswim or TD Ameritrade. That is what I currently use. I also have a Webull account. There's a link below. If you want to get a free stock, you can create an account now, or you can go ahead and choose Robinhood. A lot of young people and a lot of new investors are going to Robinhood because of its simplicity. With that being said, that's all I have for you today. Thank you for watching. If this helped you in any way, hit the like button, subscribe to the channel, and I look forward to seeing you on the next video. Peace.